Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 14th of April. All right, now let's just have a look what's going on with the currencies. The dollar's a little bit lower as we come into the Asian session for Wednesday. Now, it's going to be a little bit confusing for some traders with sort of less knowledge around the markets. But there's a couple of key things happening, right? The US treasuries are still the dominant factor in the direction of the US dollar. Now, when you come down to the macroeconomic numbers, it's not exactly clear because the central bank's sitting on the sidelines and they've sort of given us some targets, told us that if inflation goes up, it's not going to change their plan somewhat, or at all, I should say. So the numbers have come out strong, pretty much as expected, but better than the previous numbers, right? So you can see that sort of clear as day. With the movement, though, what you really had to wait for was what does that do to the US treasuries? At the same time, or not long after, there's a US 30-year bond auction, which was extremely well received. The yields have fallen, okay, a little bit, and that gives the dollar a downward push. Basically, lower yields means lower interest rates. The dollar comes off, and the dollar block, right? These pairs go down, and the dollar block go up, right? And the equity markets rally, which we've seen the NASDAQ, the sort of core equity indice at the moment, rally. So that's sort of normal. But a lot of traders got run over because they sort of looked at this and think it's normal market conditions, stronger numbers, we buy dollars, and that's it. There's more to it at the moment because of the structure of the markets and where the central bank sits. The central bank isn't sitting on top of everything at the moment. They're sitting on the sidelines, waiting for things to develop, and it looks like they are. So, you know, we are getting closer to normal markets, but we aren't there yet, right? So that 30-year bond auction also obviously a key component to those treasuries moving. And so what that leaves us with, okay, after you've seen the data comes out, you see the move in the treasuries, price goes up, which means the yields are lower. We've seen the dollar sort of crunch down through 92, the figure on the dollar index. And across the board here, we've seen the dollar block, which is the Euro, Sterling, Aussie, and Kiwi, right? Actually, Euro, Aussie, and Kiwi rally. Sterling, it's still doing its own thing. You know, it's got that connection with the vaccines and the euphoria and concerns about AstraZeneca, etc. It's just sort of banging away, but it's periodically coming into play. And check out the crazy price action here on dollar CAD. Very loose, right? This is loose markets, and there's a lot of pain here. Now, if you're looking across the board and think, oh, that was an easy move, it was by no means easy. The price action here on dollar yen, as I said, dollar CAD, both sides was problematic. Kiwi, even the Aussie, had a short-term little blip in the dollar strength, and that was counteracted by the fall in the dollar as those treasury yields fell. If anything, the euro, my nemesis, I keep thinking it goes lower, but it's still heading up, heading to the top side. So if we get the flow-on effect into the dollar, this dollar weakness, I can still see a couple of hundred points on the dollar block, right? The US dollar could easily drift down on the dollar index down towards 90 the figure. It's a 180-point move. That's going to put euro well above 120. Sterling, I'll leave that out for the moment, but Aussie up towards 78, 80, and Kiwi up towards 72. But we have to wait and see if this picture fills out because we're getting these periodic moves and then everything stalls. What we need is consistent data. Now, Thursday, we've got the US retail sales figures coming out. I think it is. Yeah, there it is. So that's probably the next major focus for the markets from here, right? So we have to sort of wait and see how this develops, see what the impact on the treasuries is. That will then flow into the equity markets, and that'll flow into the currencies. So at this point in time, number one, you're looking at the macro data. Number two, the impact it has on the treasury market. Then that flows into the equity markets, and then we get the impact on the currencies, right? So there's a few connected dots. You don't just run in on the macros at the moment because we aren't in that normal market situation. And outside of that, all you need to do is just relax. Let the market determine when things are going to happen. Keep up to speed with what's going through on the dollars, on the US dollar, I should say, on the dollar pairs. Obviously, keep abreast of where things are with regards the vaccine rollouts. These opinion pieces, in my opinion, they are opinion pieces. This is like delayed news to fill the whole news service. What we're really looking for is what's going on in the dollar. What are the central banks doing? Now, we know the central banks are on the sidelines, so just keep abreast of what is driving the US dollar around and the other instruments. At this stage, the dollar is in control, and in particular, the US treasuries. Get a bit of a mouthful there. So keep an eye on those, and that will determine where things go. As you come into the Asian session today, obviously keep a close eye on the US equity futures. That'll give us a bit of direction for where the US equity markets open up. Now, don't think just because the NASDAQ has gone up during the North American session, it's pretty natural for the markets to have a breather and drift lower during the Asian session. So don't think it's a turnaround the dollar. A lot of people are getting confused with that. They like see the US equity futures go into the red and they start selling dollars. But you know what? There's no real movement. Look at the price action here. It's like 0.06, 0.05. There's no clear movements. It's just the market's having a pause, waiting for the next opportunity. And that's pretty much it, guys. There's not much more to do. It is only Tuesday in New York. So there's plenty to play for. Lots of data coming out. Wait for the dots. Wait for the different things to connect. I'm going to say the dots to connect. And then once we do connect those dots, we can then sort of isolate the best trading opportunity and then put your cash in the market. Right now, we've got dollar weakness. Let's work with that and see if the markets keep giving us that further dollar weakness. Then we'll know exactly which pairs to hit and when to hit them. Right? All right, guys, have a good one. Cheerio.